Welcome, guys. Welcome to another live stream. Welcome to another live stream. Amazon reaches $2 trillion market cap, right? If you guys haven't seen, I saw on Yahoo Finance that Amazon has reached 2 trillion for the first time. And this is kind of like the new wave of market cap sizes. We had, I think Apple was the first company to reach $1 trillion. We had Nvidia, we have Microsoft, I believe. We have, now Amazon. Well, Amazon already hit a trillion, but 2 trillion, right? Multiple trillions of dollars. And then Apple, right? So those four, I think those are it. There may be a few more that are in the trillion dollar space, but this is kind of the new market cap sizes. We have more liquidity coming into the market, more production. A lot of it has to do with AI, the crypto space, blockchain, and stuff like that. When you're able to produce more, or when you're able to output more, you're going to get a lot higher market caps. And typically, market caps switch in sizes. So what was once considered to be a small market cap is now considered a big market cap, and what was considered a big market cap is now not considered to be too much of a big market cap. Now, to explain that, back in I think it was 2013, 2015, I used to trade stocks, and I wasn't really good at it, but I was really into it, and it was mostly penny stocks. But I would check the whole market, the overall market. I would keep track of not only penny stocks, which penny stocks are stocks under $5. I would keep track of stocks that were over $5, and the key blue chip stocks. And before, a huge market cap would be anything in the 200 to 300 million dollar range, right? That would be considered huge before. Now, huge, that's not considered huge anymore. That's pretty small. Now, a huge market cap is pretty much anything over $1 billion. Now, $1 billion is like considered decent size, and that's getting pretty small too, because you're seeing a lot of these companies. For GameStop, for example, I think it got pumped up to 8 to 10 billion. Let me check. I want to make sure I'm getting it right, but I know it pumped up to a certain. And I'm also making sure my microphone went off the last live stream. It went off, and that typically happens when I don't charge it all the way. So, that happens. Hopefully, it doesn't happen this time. Yeah. So right now, GameStop market cap is 8.5 billion, and I think it got pumped up to $40 or 50, $60 like a few weeks ago or a month ago. And so if it's valued at 8.5 right now, when it was pumped up to 40 or 60, that means it was at like a 16 to 20 billion dollar market cap. And again, GameStop is not a company that has much value. Their retail stores are not what they once were. People are not going into GameStop to buy video games. A lot of the video games you could download directly from the consoles and things like that. So a company that doesn't really have much going on could be valued at $6 billion. So this shows you before, when I was saying a 200 to 300 million dollar market cap back in 2013, 2014, 2015 time frame was considered a huge market cap. Now that has shifted. Now it's 1 billion and up, and that's becoming a lot smaller. And we're seeing companies like Amazon reach multiple trillion-dollar market cap values. So yeah, and the reason why this is important is because when you invest in a certain stock, or whether it's a stock or a cryptocurrency, you want to make sure you're checking the market cap. The market cap is very important when you're investing, because that's going to tell you, okay, how much liquidity do I think can go into the stock or the crypto asset, and in a certain amount of time frame for me to make a certain percentage, right? So for instance, if I want to, let's just say I wanted to double my money, I put $10,000 into an asset or an investment, and I say, okay, I want to double this money in 2 to 3 months from 10,000 to 20,000. And I want to use Amazon as that vehicle to double my money. Well, if Amazon's sitting at a $2 trillion market cap, is it really reasonable to think that it'll be at a $4 trillion market cap in 2 months? And the answer is most likely no, because trillion, for something to jump 2 trillion would be a lot, unless there was some news or announcement that you knew of that they were going to make, or they announced. Maybe it was something like an AI partnership or something like that was going to transform the company to produce a lot more than what it produces. Then I wouldn't expect a $2 trillion company to be a $4 trillion company in 2 months, and I wouldn't expect my investment to double. Now, if that was a now if Amazon was a $1 billion company, and I wanted it to double in 2 months, now for it to go to 1 billion to 2 billion is a lot more feasible, because we just saw that GameStop had an $8.5 billion market cap, and it doesn't really have much going on. So for something to go from 1 billion to 2 billion, it is not that magical. So because we see that GameStop's at an 8.5. So yeah, I think right now, so we're making this transition into companies that are going to be worth trillions of dollars. Now, I do think we are, like I said, we're transitioning. So right now, I think NVIDIA is at like 2.5. And again, we're going through an AI boom where there's going to be a lot more production. A lot of companies want to implement AI into their strategy, their roadmap, so they can start rolling out a lot more products, a lot more AI services and things like that. So it could be that multiple trillions of dollars is the new market cap size. You might have an NVIDIA that's worth 10 trillion in the next 3 to 5 years, and that's probably going to be normal. And typically, once one company kind of sets that off, other companies are going to adapt, right? Other companies are going to look at NVIDIA and say, okay, what did they do to get to that multiple trillion-dollar market cap? How did they get from 3 trillion to 10 trillion? Now, obviously, they can't copy exactly what NVIDIA does because they make chips, but they'll probably implement something along the same type of category. So, okay, for instance, AI is what took it from 3 trillion to 10 trillion. We're probably going to implement something with AI. Let's just say Apple's sitting around, I think, close to $3 trillion. They might want to go from 3 trillion to 10. So they might implement something in their products, which they have. They recently just came out with or they had a conference talking about all the AI stuff that they're implementing into their products. And they've been pretty quiet about that for the most part compared to other companies. So, yeah, I think trillion-dollar market caps are going to be the new thing, and I think you should definitely consider it when you are investing. Because I was watching Richard Fain's talking about NVIDIA a lot, and he's saying, because after the split, it did a 10-to-1 split, so NVIDIA was trading at $1,200 to $1,300, so now it's trading around, I think, 115, 120, somewhere in that range. And like he's saying, okay, I think in 3 to 5 years, the stock's going to do a 5 to 6x, and that will put it back around that $1,000 to $1,300 range, and then also put it at a close to a $10 trillion market cap, right? So in order for it to do a 5 to 6x, it has to be sitting at close to a $10 trillion market cap. So he's betting on that too, and I think that's very possible. I think before, like I said, I think Apple was the first one to hit that $1 trillion market cap, and it was always, bouncing back and forth, like going under, it would go over a little bit, but now it's surpassed that, and now companies are just, crushing or surpassing that $1 trillion market cap like it's nothing. They're getting in the multiple of trillions. So what that means is, for stocks under $5, or for stocks for stocks under $5, for stocks on like at $1 billion market cap, billions of dollars, that means it's just going to be easier for those stocks to jump. There's a lot more liquidity in the market. Now, whether that's real liquidity or not, who knows? Because again, a lot of the shares that are held, but like a lot of people that hold these shares are big shareholders. So, if they ever sold, that stock would take a tank. It would definitely dip. So whether the numbers we're seeing on companies, whether that's real value or not, I mean, obviously it's real value. They can pull it out, but it's whatever it says on the market, that's what it is, and it just suggests that there's more liquidity there to make these lower cap stocks jump a lot quicker. So it's good news for investors. Typically, that's the transition for market caps. It's usually that they get a lot bigger. Companies get a lot more valuable, and that just means more opportunity for people that invest, and especially when it comes to those lower cap market, those lower market cap stocks. So yeah, well, like I said, billion, and what's cool too, this is happening during the crypto bull run. We're in the middle of the crypto bull run, and there's a lot of projects specifically in the AI space, and just also in the hot sectors, whether it's like the BTC L2s, the Ethereum killers, like your Solanas, your Avalanches, your Cosmos, and just platforms like that. Those are all those projects. Like an Avalanche is valued at I think 10 billion right now. That's very small, and they actually provide value. I think that's the cool part. Like a lot of these projects in the crypto space, they're valued under $10 billion, like the real good ones. There's some other promising ones that are like under $1 billion. So that's why you see right now, yeah, like the crypto space it's a lot of risk, but it's a lot of reward during a bull run because of these market cap transitions. I mean, if you have companies going in the $1 trillion space, I mean, just think about all that liquidity that can go to a market cap under 10 billion or under $1 billion. It'll make a crypto asset or a stock go up 20 to 30x in a week, right? And maybe 100 to 200x in 2 to 3 months. If it's the right asset, if you're in the right play, if you're in the right sector, those stocks can go up a lot. And crypto assets can go up a lot. So that's the fun part. It's very exciting, especially if you're in the space. If you know what projects to look at, it's a good time to be in any of those places. Whether it's stock market, crypto market, real estate. Yeah, you could see it too. The overall real estate market. Obviously, if prices are going up for houses, then that means the overall market cap for real estate is going up. Overall market cap goes up. That just means like what was considered to be a medium-sized priced home is not going to be the same medium-sized priced home now. So if you could have bought maybe a 3 to 4 bedroom for 200,000 5 to 10 years ago, you're probably paying 4 to 600,000 for that same home. Now, you're not getting more home. It's just that home became a lot more valuable, right? For real estate, it's a little bit different because I don't know if you don't really see the additional value. It could be the inflation, right? Well, it is the inflation, and it could be that those real assets are a lot more valuable. With the stock market and the crypto market, it's a little more, like I said, it's still real because you could still sell your stocks. It's a liquid market, but I think at least with real estate, it's something you can touch. But again, it's not as liquid. So yeah, the market cap for the whole overall real estate market has gone up, and that in turn means that the average medium home has gone up in price as well. But yeah, as far as that goes, yeah, there's opportunity there as well. If you can get a decent home and in a good area, location, and stuff like that, it's easier for you to sell. I know, again, with the interest rates coming or being cut, everybody's predicting that it's going to be cut in September. And most people are going to probably be looking for a home during that time period. Because right now, it's like 5%, I think 5 to 6% that you can get on your home, like on a mortgage. So yeah, most people don't want to pay for that. Or if they do buy a home during this high interest time period, they will be refinancing once we start to get those rate cuts. We're going to get the first one. Hopefully we get 2 this year, but if not, we'll probably get it at the start of the new year. And then next year we'll probably do 2 or 3. They're going to cut it down until we get these rates down to like 3 to 4%. That's most likely going to happen. Then we'll probably stall out for a bit, and then we'll go into that period where we just have lower interest rates. I don't know if we could get back down to 2%, because I remember people could get like close to like 2% or under 1%, which is crazy. But yeah, if you are looking for a home during that time period, make sure you do lock in some type of rate. Again, I don't really like homes. I don't have a home. I rent. But I do keep up with the interest rates. Even though I don't have a home, I still keep up with the interest rates because that affects the overall market and how people invest and stuff like that. But maybe one of these days I do get some type of property. Maybe it's not to live in, but some type of investment. But I always keep track of the interest rates and how that affects assets like crypto or stocks. Okay, so let me see, because I did have this article for Amazon. I don't know if I want to share. It's a Yahoo article just saying Amazon hits $2 trillion in value on AI fervor rate cut bets. Okay, so yeah, again, AI is driving these valuations for trillions of dollars. I think it's a combination of AI, blockchain, and crypto. Because the thing about AI is that what we had before, and I think what the new trend right now, like we're kind of transitioning into, is decentralized AI. Because AI is going to be what they're saying is AI is going to be too powerful, and they don't want it to be centralized, right? So we don't want people in control of a bot that knows everything about us or has all our information to make certain decisions or gives us some type of product or offer some type of service. So we don't want one entity to control all of that. So decentralized AI is kind of the AI 2.0. And for instance, so for crypto, there were services that offer GPU power, but they were centralized. You could go to a website and then get centralized GPU power from different areas. But again, it was from a centralized place. But now in the crypto space, they have it to where you could get GPU power, but it's coming from multiple sources again, but it's owned by a blockchain, right? It's all on the blockchain. The blockchain makes the decisions. People get paid out in tokens to offer GPU power to the public, and no one entity owns the infrastructure, let's just say. So I think that's what's creating it as well. And I'm not sure if this article specifically talks about decentralized AI, but that's kind of what's pushing it. It says Amazon Web Services and the largest cloud service providers in the world, and growth at that Amazon has returned after a dip in the past year thanks to surging adoption of AI technologies. The company has also invested in AI startup Anthropics and robotics firm Figure as it looks to capitalize on the AI boom. Yeah, and so remember, NVIDIA is what's kind of leading this AI boom. And AWS, the cloud services that Amazon offers, the computing power is using the NVIDIA chips, from my understanding. So although it's not a specific AI play, they are offering that GPU power that I was talking about. And what I was saying, there's projects, they're called DePIN projects, that are offered decentralized GPU power at a fraction of the cost that Amazon's offering it. So yeah, it's very exciting. I don't think I want to show this. It's on Yahoo Finance. It's called, again, it's from Reuters. They kind of scoped it out from Reuters. It says Amazon hits $2 trillion valuation on AI fervor rate cut bets. So yeah, that's pretty much it. That's what I wanted to talk about today. Market cap is very important. Make sure when you're investing, you're looking at market caps and you're seeing, okay, what is considered a big market cap? What is considered a small market cap? What is considered a medium market cap? I think every couple of years or every year, you should have like some notes written out to so you could be reminded of that. So when you invest in a certain asset, you could say, okay, but the goal is that I want to double or triple my money in a year or two, right? And you say, okay, this company's valued at $5 billion. Do I think it could get, if I want to triple my money, do I think it could get to 15 billion in these next 2 to 3 years? And looking at the overall market cap sizes, I think 5 to 15 billion is very possible, but does the company have upcoming news and excitement to justify that $5 billion to $15 billion increase, right? So market cap is very important. It's one of the most important things when investing in a stock or crypto. And sometimes if it's too low, that may not always be a good thing. People think, oh, lower market cap, the higher it goes. Sometimes if it's valued very low, there might be a good reason why it's low, and you might want to stay away from that stock, or crypto or whatever asset. So you may want to do your research and make sure that you're not just getting into a company that probably has nothing going on and it's probably gonna decline 3x in the next 2 to 3 years. So yeah, that's pretty much it. I'll see you guys in the next one, and take care.